Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Tuesday, 10th day of January 2017, and this is the Daily Report for Gold and Silver. We do have moderately higher pricing in the precious metals markets across the board, with gold currently trading up about $2.90. When we look at COMEX gold, we are trading at $1187.40. It's traded to a high of $1190.60 today and a low of $1180.20. So we do have somewhat of a compressed range, but we are trading, as I said, moderately or modestly higher on the day. Next, take a look at silver, and we're looking at it in terms of COMEX futures. That is trading up about 14 cents. So we've got a pretty dramatic rise today, up almost 0.9%, 1683. And it has traded to a high today of 1695.50 and a low of 1657. So we can see that silver has been pretty active today. When we look at spot gold, pricing the same, net change, of course, is going to be different, up about $6.50 at $11.87. And when we look at spot silver, up about 25 cents at $16.78. Of interest today is crude oil. First of all, continuing to sell off and sell off hard, down over 2%, 2.23%, trading off by $1.16 per barrel at $50.80. The low today, 50.77 with a high of 52.37. So you can see we've seen that trade under pressure. Dollar in essence unchanged on the day, up ever so slightly, trading at 102. And then the big news in terms of equities has to be the NASDAQ, because the NASDAQ is once again trading at a new record high, up today, where we had the Dow Jones Industrial Average off a little bit and the Standard & Poor's in essence unchanged. So an interesting day in the market. Let's take a look at our first chart. So traders, the first chart that I do want to look at on today's show is going to be a weekly chart. Standard candlestick format, and this, of course, is of gold futures. The one thing that we can see quite easily is the fact that now, really for the third week in a row, and of course, this is only Tuesday, so things could change dramatically by the end of the week, but as of right now, we have had 3 consecutive weeks in which we have had stronger closes than the open. They're green candles, obviously. We've got good body size. And the second thing to me that's very noteworthy is that the low this week does occur above what I believe to be a pretty critical level, which sits at around 1172. Of course, we are long gold as well as silver. Both of those positions have moved into our favor. We have not looked at stop placement in terms of moving it just yet. I am following it close in case the market does backslide a little bit. I don't want to risk what we've got initially on in terms of a risk factor, but I believe that we should have pretty clear sailing and not really run into any technical resistance till about 1200, 1210, and I'm specifically looking at these two bottoms that occurred, of course, back in June and July of last year, and they come in, as you can see, roughly at 1200. So I believe we've got a pretty clear path up to 1200, and then we'll see if it's going to kind of just barrel through that particular price point, or if we would find any kind of resistance roughly in this area. I personally think if we do, it would be minor resistance. So traders, the next chart that I do want to look at is a daily chart. Now I've put this in bar format rather than candlestick because I want to focus on highs and lows. And I also, on this particular chart, want to focus on a Western technical that is really panning out quite nicely in terms of showing us some bullish activity. And that, of course, is our moving average convergence divergence, or MACD. We can see that when we hit these lows, and these lows of course, occur. The lowest that we hit, I believe this was December 15th, when we came in and actually tested 1122, 1123. From there, for about a week, we really formed a base within the market. And then, of course, towards the end of last year, beginning of this year, we've had this slow and steady climb. If you look, it's just been about a week, and we've actually broken through our moving average, which is, I typically will set that as a 28-day moving average. I find that that works very well in terms of giving us an indication whether the market is bullish, bearish, or sideways. And as you can see right here, we're absolutely sideways. So you see the market alternating between above and then below this particular moving average line. You can also see that when the market's under pressure, any kind of consistent pressure, it will stay easily below that mark. And as a market moves up, as you can see, for example, right in here, you get the consistency of it being above the moving average. So 28 days seems to be a pretty good format to look at. But nonetheless, I see this market as having more steam ahead. As I said, the first real area that we would look for, and you can absolutely see that on this bar chart, would be the level of about 1200. So I absolutely think we have clear sailing up till then. So traders, we are looking at silver. This is a daily bar chart, also containing a 28-day moving average. But we also have our channel lines through eSignal. They're called a linear regression. But our channel lines show us it's very, very short term because I've got this set to 22 days or 22 cycles. There was a bearish tendency, so to speak, to the market. You can also see it came up to the upper end of this channel, traded down to the lower end of this channel, of course. And what's interesting now is we have not only traded and broke back above a 61% retracement, a 28-day moving average, but we are now at the top of this channel. And what's interesting about that is because I still believe that we have upside potential based on other technical studies, I would expect, or I should say I would not be surprised in the least, to see silver prices break above this particular channel. And of course, when we look at silver through a daily, I've just converted this to a weekly, and we get a much more long-term standing viewpoint or vantage point of the market. We can certainly see this bearish channel that has been existent in the market. Now, it's not really traded to the top or the bottom of this channel, but we have crossed over the midpoint. We are above the 61% retracement. Now, that, of course, would not change regardless of the time scale that we set for each bar. But I do believe at least on this particular chart, you can see that there is absolutely room to the upside, say about 1720 in terms of an initial target. So traders, a quick look at the dollar index. Now, on a weekly chart, it's hard to tell that we had this market trade in essence unchanged. Let's go ahead and convert this to a daily to get more of a clear-cut idea of recent activity. But we can absolutely see that the market's been really in a congestion area with a bias to the downside, A, and secondly, with some real striking technical resistance up at around 103.50 to 103.61, which is where this line comes in at. I still believe that the dollar could fall under more pressure, but that's after one of the most dynamic surges in price that we have witnessed in years. Dollar currently trading at 102, in essence unchanged on the day. Traders, we are looking at a daily chart of the NASDAQ. This, of course, is a NASDAQ 100 E-mini, and you can absolutely see we have 1, 2, 3, 4, 5, 6 consecutive days in which the market is closed higher, and now 3 consecutive days in which the market has closed at a new all-time record high. Tech stocks absolutely on fire. And lastly, crude oil. Unlike some of the markets moving up, crude oil under tremendous pressure. We talked about the fact yesterday that we had a major break to the downside in crude oil. You can see that with this large red candle. And then today, we've broken through what should have been some sort of a technical support if the market was going to maintain this neutral to slightly higher bias that we have seen really mid-December throughout the beginning of the year. But this break not only below our channel lines, but break below our 28-day moving average, to me is signaling dramatically lower pricing. $50 easily, that's highly achievable. But traders right now, I believe that if we see continued pressure in crude oil, we will see this market go below $48 per barrel. This has been Gary Wagner wishing you, as always, good trading. Maintain your current long position in gold. Maintain your current long position in silver. Keep all of those stops in play. We will look to move them up, but I want to see where this market is going to go with Trump's press conference tomorrow, as well as what is going on over in the congressional aspect, in which they are looking at his cabinet picks and staff members. That could really create a little bit of uncertainty in the market. And of course, we're getting closer and closer to Inauguration Day, which will occur, of course, on January 20th. Have a great day. Bye-bye.